Hi there, everybody. Thanks for coming. My name is Ryan Trainer, and I'm going to be your host for today. So, thank you all for coming to the Money Smarts for Teens class. I'm the president of the Redwood City Youth Literacy Council, and that's the team that's putting on these classes. My mom, Martha Trainer, is in the back. She's going to be taking pictures and videoing. So make sure if you're not supposed to take photos, make sure you sit in the no photos section over there on the left. All right. If you have any questions, she's the best person to ask. She's also on the Redwood City Library Foundation Board, the group that sponsors the Redwood City Youth Literacy Council. We were lucky enough to win a grant from the State Farm Youth Advisory Board to put on these classes, so they're free for all of you. Not only that, we've set it up so that if you attend 7 out of the 9 sessions, you will receive a $200 Visa gift card. That is similar to earning over $22 an hour today once you figure in the work taxes. Today's minimum wage is $9 an hour, so if you take 7 out of the 9 classes, you'll make a lot more than that for learning, so that's pretty great. Alright, so this class is the first in a series of 9 classes that change the theme each month. This month is about banking basics. Next month is about earning income and understanding your paycheck. You should all have the flyer with the class dates and subjects. If not, there will be one at the check-in desk in the back room. If you haven't signed up for all the upcoming months, do it today because some of them are already full. One important housekeeping thing for today. If you could please help us out by cleaning up any mess that you make prior to leaving, we would really appreciate it because we're all volunteers here and we have other things to do and we have lives as well. Also, we're going to be serving pizza, probably one of the better parts of this course, towards the end of the session. So I'll let you know when we're going to serve that. Make sure that you don't try and make the least amount of mess as possible because we are volunteers after all. We do have to clean up after you. So let's start by introducing our financial experts today. They're from Wells Fargo Bank, and I'll leave it to you, Armando.
Thank you so much, Brian. Appreciate it. Hi, guys. Hello. Hey. How are you? Good. Welcome. It's good to be here. So we'll go over, as you all heard, a presentation. This is the very first month that we launched this program, so consider yourselves very lucky because I know when I was growing up and in high school, middle school, I definitely never had any financial education of this nature, so you should all consider yourselves very lucky. So again, welcome and thank you so much for being here. So we'll go ahead and discuss, I guess, our agenda. And so we'll go over a bit of an introduction. You guys already took the pre-test. We'll do a video discussion, and then we'll do some group work as well as Q&A, and then we'll do another test towards the end, and that should wrap up the night. All good? Yeah. All right. Awesome. And the most important part, someone said, what was that? Pizza. Oh, yeah. All right, guys. So we'll go ahead and do an introduction. I'll start with my buddy. This is James. And go ahead, James.
Thank you for letting me join you this afternoon. It's pretty exciting, actually, to think about the potential that you have in your financial futures. The biggest thing with financial futures is that you have to remember to do things right from the beginning. And I think that these tools will give you an opportunity to understand a little bit more about where you need to be in the future. Because let's face it, we all like money, right?
Right?
Yeah. I don't understand how this works out. We give these. It's a pretty sweet deal. I like that. First of all, a little bit about myself. 7 years experience working in the financial industry. Started out at the bottom as a teller. Do you know the difference between a teller and a banker? Has anyone been into a bank? Ever? What's the difference between a teller and a banker? There you go. We used a couple of keywords: withdrawal and deposit.
Here, how about you pick one of those?
Yeah, there you go.
Great answer. All right.
Now I've graduated from teller to banker, which provides a little bit more financial coaching, if you will, along the way in your future. Consumer lending is what I typically focus most of my energy on, and the personal banker part of the end is a bit repetitive. It describes the fact that I do a little bit more than just business banking per se, more on consumer end. Armando is our business banker, as a matter of fact.
So a little bit about myself. I've been in the industry for the last 10 years. Started off in real estate. That's a hot commodity, obviously, in Silicon Valley. I've also started 4 businesses on my own. So I had a lot of mistakes, but a good learning curve. As you all know, nothing ventured, nothing gained. And my title now is I'm a business banker, as James just told you. So, you know, I don't want to talk all night, but I'd like to definitely encourage some participation. How about some volunteers, and maybe we can start off with your name, what school you're from, and maybe your hobby or something. All right, we'll go 1, 2, and 3.
My name is Luciano. I go to the international school in Queensville,
Awesome.
and hobby, I like programming.
Nice. Well done. All right.
Hi, I'm Ollie, and I go to Carmel High School. And
Hobby.
hobby, I play lacrosse.
Well done. Welcome.
I'm Levy. I'm from Woodside High School,
Okay.
and my hobby is water polo.
Nice. And we're getting some rain today, so that's very important, right? Anybody else? Maybe like 2 more people. All right. Well, 1, 2, and 3. Here you go.
I'm Samantha. I go to Red Cloud Middle School, and my hobby is musical theater.
I'm Oliver Golden, and I go to Carmel, and I like origami.
Nice. Welcome, guys. Go ahead.
Drew, I go to Sequoia High School, and I play football, basketball, and I run track.
Hey, you always gotta love the athletes, right? Welcome, guys. Good. So, we already did the pre-test, so we'll go ahead and breeze right through this. So let's just dive right in. We'll be discussing 2 items today. One is a money toolkit, and then how to apply them. All right. Now, Wells Fargo has a website. It's called handsonbanking.org. You guys can go ahead and write that down. This is actually a service that Wells Fargo does for the world. There's a lot of tools, there's a lot of videos. Handsonbanking.org. So a lot of the videos and material will be directly from that website. Handsonbanking.org. Talk to your. So we will be looking at one of the lessons directly from this website. Today's lesson is going to be you and your money.
And you don't have enough money. Does your card go through?
It bounces.
Yeah, just bounce. Your card might not go through. What else do you think will happen?
The bank sends back a message saying it declined your card.
Yep. One more thing. What do you think? The transaction could go through. So if the transaction goes through, what do you think the bank charges you?
I forget the word for it.
Starts with an O.
Wait, oh, never mind.
Overdraft. So now you're at Starbucks and you're buying your frap and it's $5. You don't have any money in your account. You have Overdraft Services. Will let you use your card, then you'll get an overdraft. Do you guys know how much your frappuccino ends up costing after you overdraft? Someone guess. $40. Yeah.
I bet it tastes real good, right?
That'd be a really good frap if you're paying $40. And that's really the reason why we're here, to help you understand the concept of that and how everything really works.
Money management is easy if you have the right tools for the job.
And the best place to get those tools is a financial institution, like a bank.
Exactly. Millions of Americans use banks, and chances are a successful person or business you can think of has a relationship with a bank. The fact is, banks offer safe and secure services that can help you save time and money and build a strong financial future.
Depending on where you live, you'll probably have a number of banks, savings and loans, or credit unions to choose from. So think long-term relationship and shop around for a financial institution that meets your needs.
Okay. So, that was pretty clear. And we'll go ahead and review this momentarily, so don't worry about capturing all the information.
Just a reminder, you can
Okay,
click
so
on the
here's the
individual
big secret
words.
about
and
using
they'll-
money management tools. There is no big secret. I mean, all it takes is a little adding and subtracting and some focus on keeping good track of the money you've got.
I agree. Once I opened my own savings and checking accounts, I found it's really easy to use them. The only trick is to make sure you don't spend more than you have. If you do, you'll really pay for it, believe me.
Absolutely. That's why we have a whole section called Keep Track. Well, let's start at the beginning. On the next few screens, we'll show you how to open your bank accounts and how to start using them.
All right. So, let's go back to the last one. And we'll go ahead and discuss some of the basic, I guess, how we as individuals interact with financial institutions. So, just show of hands, how many of you guys have a checking account or savings account? All right, well done. And here, I'll pick a volunteer. How long have you had that since? 2 years. And was that your choice, your parents, or? Okay, great. Anybody else want to share their experience? All right, all the hands went down. With your accounts. Yeah, so the question was, how many of you guys have checking or savings account? So a lot of people raise their hands. So, would you mind sharing what your experience is?
Sure. I've had mine for like 3.5 years, and it was my parents' choice.
Okay. Awesome. And I would imagine you probably put some money away, maybe birthday money or allowance. Or,
Yeah.
how about anybody have a job? Babysitting counts? Part-time? Okay. And what do you guys do with the money that you earn? College fund. Okay. What else? How about budgeting? Does the money stay in the account or does it leave the account pretty quickly? All right, that's good. We got some goals. So,
As far as accounts are concerned, what types do you have? Do you know the difference between a checking and a savings account? Yes. Okay, we'll take a
Is the
walk.
checking account one that you use regularly, and the savings account is where like you save up money?
You couldn't have really read it out of the book much better. That's perfect. And the reason why you do that is because you want to earn interest on your money, and that's the reason why you don't keep it under your mattress, right? Or in your sock drawer or wherever else you might think it's convenient to keep it hidden. You want to make sure that it's safe and that no one has access to your money, but at the same time you want to have an opportunity to grow your money, and that's the reason why you do banking with financial institutions. They're federally insured. They have big, huge safe vault doors. I know everyone's seen movies with a safe in it, right? Ocean's 11, or maybe that's a little bit too old for this crowd. Maybe that's a little old for this crowd.
That's a classic.
Do you have a question? I guess that could be a concern, absolutely. They have maintenance people that can fix those too, so definitely not a reason to be worried about anything like that.
so as James is saying, there's a safety benefit, right? Because what would happen if all your money is at your house? It would be stolen. What else? But what's a primary benefit of putting your money in the bank?
Yes.
Interest. What else?
You could like use
Exactly. But I'm looking for one particular word.
Safety.
Safety, right? Because it's insured. So we'll discuss that in a little bit. It's also convenient. All right. Think of, for example, let's say right now Thanksgiving or the holidays are coming up. So you have your money at a specific institution. What if you're out of town and you need some cash? Where would you go and withdraw some funds? Exactly, right? So it's not like if you left it at home, you're pretty much kind of out of luck, right? So having the convenience of being able to access your money anywhere is definitely a cool thing. And just a few more, it's easy. Again, obviously the convenience piece, and then the saving money in terms of earning interest, and then the security, which we'll talk momentarily, as well as other items. So let's discuss the types of banks that there are according to the video. How many of you guys know what a commercial bank is?
Just like a normal bank, for example, what are the jobs are going to be?
Yes. Another example of a commercial bank.
Bank of America?
Perfect. And I heard Chase. One more. Well, yeah, Wells Fargo. I'm sorry? That's actually a credit union. But that's fine. How about an investment bank? Any of you know of any investment banks?
Is it like Charles Schwab or something around that?
They do have a bank, but they're more of an investment brokerage, but close enough. Morgan Stanley, exactly. How about another one? You guys have heard of Merrill Lynch? You've heard of Goldman Sachs? So those are investment banks. How about a credit union? We already heard Merriwest. What other ones? Sorry? Stanford Credit Union. Yes, that's a very good one.
San Mateo Credit Union.
San Mateo Credit Union. That's also a very good one. Any other credit unions that you know of? Did you have your hand up? Yeah. I think you were going. Okay. Sorry. So here's a question, guys. What is the difference between these three financial institutions?
Commercial bank is mainly easy access, so low interest. Credit unions are usually rather small and they use your money for a thing, but you don't want to get access to it and higher interest. And I'm not sure about most banks.
That's actually very, very excellent.
Can you repeat that on my?
Go ahead and repeat that.
Commercial banks are easy to access but have lower interest rates, while credit unions are generally smaller but have very high interest rates, and they use your money for certain things so they can fluctuate.
Did you guys get that?
I think one of the biggest things with commercial banks that separates it from credit unions is the accessibility of it. Look at Wells Fargo, for instance. How many ATMs do we have across the U.S.? Over 100,000 ATMs. So when you look at it from that perspective, and the San Mateo Credit Union is a great idea, but you can only access your money at the San Mateo Credit Union.
So there's different functions, right? I mean, whether you go with a credit union or a commercial bank, a lot of that's going to depend on what your needs are. Go ahead.
I was going to say, can a commercial bank, isn't a commercial bank generally used for your, credit accounts, I think? Or not savings accounts, you have to, and credit unions are used for your savings accounts, not to withdraw money from?
Yes, exactly. And so going back to commercial versus credit union. Credit unions, they're very good with consumers, meaning consumer products, meaning your credit card, your car loan. Somebody was saying, I think it was you, about tuition, right? But there's a limitation. So for example, how many of your parents have their own businesses? Okay, so a couple of you. So when a business owner goes and wants credit for their business, there's a different institution, and normally that would go through a commercial. So it's not about one is better than the other, it's just, it really depends on what your needs are. In terms of what banks offer as far as services, so the main entry, you know, to have a relationship with a bank falls with these categories.
Well, I mean, we've already gone over checking and savings accounts. Has anyone heard of a money market savings account? More business oriented. Certificate of deposit is a really interesting type of a savings account. So the biggest thing with the CD, as the acronym is shortened here, certificate of deposit, is that it is agreed upon time frame with which you're going to leave that money in the bank. So we were discussing earlier that you can take money out of a checking account, but not a savings account, right? Well, it's not completely true. 6 times a month, you can take money out of a savings account, which is different than a checking account because there's no maximum amount of withdrawals. With a CD, you agree with the bank, and typically with this agreement will come a higher interest rate. So let's say you set up a certificate of deposit for 6 months. You can't touch the funds for 6 months, but at the same time, you're getting an increased interest rate on that deposit that you've made with the bank because you've agreed to keep it in this set account for that set time frame. Interest rates vary depending on the amount of time that you agree upon with the CD, but it's a very good opportunity for you to be safe with your money because you have no access to it, right? It makes the most sense.
So going back to what a money market savings is. Anybody ever heard of a money market? But you've heard of it, right? How about on this side? Anybody ever heard of a money market? What do you guys think it is? I'm sorry? Okay, well it holds your money, so close enough. Anybody else would like to guess?
Is it similar to certificate of deposits?
How so?
As in like you leave your money in an account for a certain amount of time and the interest rate goes up?
In the case of most money markets, the funds are liquid, meaning you could access it tomorrow if you needed to. Whereas in a CD, if you make a commitment for a year, 5 years, 10 years, you can't touch that money until the end of the term. If you break the CD, normally you would get penalized. But when you establish a CD, you're doing it because in your mind, you know that this is money that you can kind of tuck away. Whether it's 1,000, 10,000, 100,000, right? Go ahead.
So is money market like where you make trades, like buy stocks and things?
Some money market accounts, that's a great question. Some money market accounts are definitely tied to the market, meaning the stock market. But really what a money market savings account is, it's essentially a hybrid of a checking and a savings. You can actually write checks from the money market directly, but you're limited to the number of checks that you can write per month. And it does earn interest. So it's, like, again, it's the best way to think about it. It's somewhat of a hybrid between both accounts. Now, let's talk about some of the services that you would find at a bank.
Does everybody here that has a bank account have a debit card? So we've gone down in percentage a little bit. We're down to about 5% of the people that had accounts. Okay. So a debit card is what? Who wants to answer that question? It's pretty simple, right? We'll go somewhere else here. You've answered way too many. How about for you, sir? Sure, why not?
A debit card is a card that has money directly on it,
Okay.
and it doesn't necessarily get taken from your account.
Okay. Close. It does have money on it, but it is, okay, how about over here for you, miss?
Oh, me?
Sure.
So a debit card takes your money directly out of your savings account and you can't go over.
We're getting a lot closer, so we're going to combine the two answers. A debit card is attached to whatever account you sign it up for. So typically, you're not going to be penalized for taking out of your checking account on a regular basis, so you'll debit it from that. As far as this particular card is concerned, you have two different ways to go. You can access it from your credit union, from your ATM, at your commercial bank, or if you have the next level, you actually have a Visa logo on the bottom that gives you the freedom to use your money in all different forms. At McDonald's, or at dinner with your family, or any other purchases that you would make on a normal swipe. If you move down to the next category, we have online and mobile banking, and I guarantee you everyone in here can answer this question 100%. Everyone has a cell phone, right?
How about a smartphone?
Interesting. Another surprise. Okay, good. Online and mobile banking is offered from most financial institutions nowadays. It gives you the freedom. Yes, sir. Well, that's another way to pay for things. Sure. You can set up all different types of debits from your accounts, all different types of credit cards or debits, or however you want to see, however you see fit. In this particular instance, online and mobile banking gives you the freedom to access your accounts online or from your mobile device, and it gives you the freedom to transfer funds, monitor your accounts, and check for all different types of activity. Overdraft services is probably the number one thing that I have to highlight for the youth because you have to remember you're limited to the amount of funds that are in your account. So does everyone know what overdrafting means?
How many of you guys go to Starbucks?
Okay, great. You'll be able to relate to this. So let's say you go into Starbucks and you gotta get your fix, okay? You got a real big test that morning. You want to get your caffeine going, right? Which is a horrible thing to say to the youth of this generation, but you know what? You know the reason why you go to Starbucks. So my point is, you've got $2.50 in your account. How much does a Frappuccino cost on average? $4. Okay. So if you have $2.50 in your account and you have to get that Frappuccino and you buzz it through, what happens to your account? You're going to have less than what you need, right? Okay. Overdraft services give you that freedom to charge that onto your card. Do you want to know how much that $4 Starbucks is going to cost you on the backside? It's going to cost $40. Every time you overdraft your account, there's a penalty. The penalty is $35. Does anybody in here ever had a Frappuccino that's worth $40?
They're really good.
I mean, I've had a Frappuccino. They're really good. But I've never had one that was worth $40. So always keep that in mind as you go forward. I know it sounds like something that's not very important, but to me personally, I don't like to overdraft my accounts ever because nothing's worth, I've never had a Frappuccino that's worth $40. Let's just make that point.
Now the flip side.
Extra credit.
Yeah, overdrafts look bad, especially if it's a recurring situation. But there's a flip side to the overdraft services. Let's say that you're stuck in a remote place, you don't have enough money to put gas in your tank. Would a situation like that make sense to consider an overdraft? Possibly, right? So the situation could vary, but definitely having the tools for online banking and mobile banking, the main takeaway from that is it helps you budget. So I know some of you guys said you have an allowance or a job, and I said, okay, how long does the money stay in there? Not very long, right? Well, having the tools to budget and measure yourself in terms of what your monthly expenses are, or weekly anyways, or even on a day-to-day basis, it's important to be able to monitor that, on a constant basis. And then the most basic service that banks and financial institutions offer, whether it's a credit union or a commercial bank, is credit. Whether you're borrowing to purchase a big ticket item, normally it's easier to ask for a loan. It could be quicker to get the funds versus you trying to save for them. Does that make sense? So how about some of the guys in the room? Can I get a volunteer to tell me what your dream car is?
Aston Martin 89 from
That is a very specific vehicle. Well done. So let me ask you this question. How much is a vehicle like that cost?
I don't know, but it's well over my budget.
So throw a number out. All right. Let's stick with 100,000. So who in the room says they have a part-time job or babysitting or Rachel? Rachel, what kind of work do you do outside of school? Okay. You feel free to answer this or round it up however you want. How much do you make typically on a week or just on a given month? Okay, so if we're looking at 4 weeks, how much is that on a monthly basis? $120. Okay. So how long would it take Rachel to save $100,000 at $120 a month? How long would it take to walk into a bank and ask for that same loan? Probably like a day or so, right? You could probably get it done within a day or so. And then exactly, how long would it take to pay that back? But the point is, there's a difference between saving, borrowing, and then yes, credit, paying it back. Because it's not like the bank is just going to say, here you go. What's going to happen to that money? It needs to be repaid, right? And typically it's repaid with interest. Make sense? You guys are familiar with compound interest, right? Yes? No? Who said yes? Who said no? Okay, do you guys have any questions around that? Interest versus compound interest? So, let's see. We'll do a quick example. All right. So typically you have a loan. Can you guys see that? Yeah. All right. So typically loans. Can you see that? Yes? So how many of you guys take algebra? Or calculus? All right, good. So you probably see some of this stuff. So you have time in years, then you have some arbitrary dollar amount, right? So when you're looking at a loan, let's say that it's that 100,000. And then let's say what? 5 years? So typically on a loan, this is called simple interest. Simple interest means that the day that you get the loan, right? In 5 years or 60 months from this day, it's going to be paid to zero. Does that make sense? So the payment is fixed. So let's say that the payment is, I don't know, $1,200. It's a very expensive car. So from the start to 5 years later, it will be paid off. Go ahead.
Let's say you're old, or you're not old, but you die, right? Before you pay off the loan.
Uh-huh.
Who has to pay off the loan?
James, who has to pay off the loan?
Everybody.
Yeah.
Typically, when something like that happens, and depending on how it's set up, normally what the bank or financial institution would do is they would repossess the vehicle, or if it's set up, and this is very advanced, that's a great question by the way, if it's set up in a trust or some other sophisticated, device to protect yourself from taxes and different things like this, it would just go according to whatever the will or the trust or that document states. Go ahead.
Let's say like a guy in his 50s or something, he gets a loan for a lot of money to buy this big building.
Sure.
Like a hotel or something.
Sure.
And he's running that hotel for 30 years, and like a family thing, everybody's doing it. But then he died, and he still has to pay off the loan. You guys repossess the hotel?
So that's the same question, right? So a lot of that depends on how the hotel was financed. So it could be financed in multiple ways. It could be financed as that person, as the individual. It could be financed as a company, right? And so the company essentially is the ones that owns the loan. But then you've got to look at who owns the company, right? So let's say that person is a partial owner, and then next to him, he's got other partners. So there could be multiple ways that purchase was made. Am I losing you guys? Are you guys okay? All right. So let's finish up with compound interest. Can I erase this? Is that okay? I guess I erased it. So an example of compound interest is what we had discussed in the last page. Either a savings, a money market, or a CD, right? So compound interest means, let's say that you start off with $1,000. All right. Somebody throw me an interest rate out there. 3%. 3%? All right. So 1,000 at 3%. So compound, this is pretty crazy, right? But this is like the most beautiful thing that was ever created. Compound can compound daily, monthly, annually, every 6 months, or every quarter. And we're talking, the timeline is 1 year. You with me so far? Yeah. All right. So who's good at percentages here? All right. Punch in these numbers. So $1,000. Let's say that it compounds monthly. At the end of the first, and we'll go like this: 30, 60, 90, etc. Right? So at the end of the first 30 days, how much is that going to be? 1,000 at 3%. I can figure that out right here. Please don't make me bust out my calculator. Okay, I busted out my calculator. Who? Exactly, right? So 1,300. So now the $300 is going to compound again on top of itself. So at the end of 60 days, it's going to be 3%, but off of 1,300, right? Instead of 1,000.
I think that's 30%.
Yeah, it is.
Yeah, it is.
I didn't want to correct him in front of everyone.
That's
Sorry.
fine.
I mean, that's credit card.
Right, yeah, now we're talking. See, now that's funny. That's funny.
This is why we need parents. Thank you so much. So, $1,030. So, what's 1,030 times 3%? So do 1,030 times 0.03. How much is that? 1030 times 0.03. Say it again? 30.9. 30.9. So now add 30.9 to 1030. All right, we'll just round off. But you see, it grows exponentially. It compounds. Does that make sense? So the interest is earned on top of the interest. Does that make sense? Yes. All right. Any questions around that? We've covered, most of the basic accounts and services that financial institutions have. So let's go ahead and read that. So banks insure your money through deposit accounts. You have the option to earn interest, or in the case of borrowing, you would pay interest. And obviously, the most basic use would be to borrow or to save your money. Any questions around that? All right, so we're going to do a group activity.
Everyone can look in their binder and just open up the paper and use your pen and draw a line down the center. And then you think to yourself, what are my money habits? And put one side with the plus and one side with the minus. And talk about things you do which you think are good money habits, things that you do that are negative money habits. Take a couple minutes to do that, and then we'll share them. So, what are some of the positive things that you do with your money as far as money habits? Can anyone tell me? Yeah.
Put in the savings account.
Good, so put some aside for savings. Does anyone, have you all heard the term pay yourself first? Yeah, that's an important concept you should use for the rest of your life. Whenever you get a paycheck, the number one thing you should pay is yourself. And that means setting aside a portion of that paycheck or that gift or Christmas gift or gift card that you get from someone and put it aside for future use because you always need a little cushion for emergencies. So what percent do you think is the recommended amount to pay yourself out of whatever you get? So if you get 100%, how much should you be setting aside to pay yourself first?
100%.
Close. Any other guesses?
50.
Yeah. Now you have to remember this is lifelong, right? So you could be an adult, and even as an adult, when you get your paycheck, what percent should you set aside?
10%.
Yes, sir.
I think it's 60.
20% is the rule of thumb. 20%. And the reason for that is, you'll see it as you go through your life at different stages of your life, especially like when you're in your 20s, it'll be very difficult to remember to pay yourself. But then you may have something happen like your apartment gets robbed or you get in an automobile accident and you have to pay the deductible on your insurance. And you're going to need to dip into that emergency fund. So remember, whenever you get paid, even babysitting money or whatever, first thing you should do is pay yourself first, put that in your cushion fund for future use. And it can be used for college or whatever, but 20% is the rule of thumb. So what other positive money habits do you have? Any, yeah. Yeah, have different accounts at different banks. So he's saying that he recommends spreading your money around. Does anyone know why that might be a good idea? Yeah. Yeah, that's true. However, there is what's called insurance, right? So you probably have seen those little FDIC insured stickers at the banks and that sort of thing. So does anyone know how much you can have in your account before that risk of it being lost goes away? $250,000. So that's why you'll see people with a lot of money will deposit $250,000, say at Wells Fargo, little plug there for you, and $250,000 at Bank of America or some other institution, because no matter what happens if your bank goes under, they are insured by the government, so you don't lose that money. Okay, so that's why spreading around is good. Another reason why spreading it around into different institutions is good is because then you have more access to ATMs, and maybe one bank will offer you free student checking, whereas the other one might offer a higher interest rate in the savings account. So you may pick one institution for one benefit and one for another benefit. Any other positive money habits you have? How about just earning money? That's a good positive money habit to have, right? And predicting, okay, I need to earn money to buy Christmas presents, say. And so I might want to do extra chores at home to earn money for my allowance. And planning ahead is a good money habit. What are some of the negative money habits that you have? Anyone? Going bankrupt, you said? Yeah. Yeah, exactly. Taking the money and spending it immediately, not keeping anything in that, paying yourself first. Any other negative things? Yeah.
Not going to the ATM and depositing money, just keeping it in your desk forever.
Yeah, because the reason why that's not good is, first of all, you're not earning money on that amount. You're not earning any interest. But also, it can be stolen. So, safety is one of them that the bank's on. Yeah. Right. Well, you know, impulse shopping is a very important thing. So if you're shopping for yourself, as an example, you won't spend as much money as when you're shopping with your friends. So if you're within a budget, you might want to consider that. Another rule of thumb is if you go grocery shopping when you're hungry, you will buy an average of 30% more things because you're hungry and you want to put that into work. So when you're grocery shopping, eat first. When you're going to the store, you might want to put a list of what you want to buy and try to stick to that list instead of just window shopping. Okay. Anything else that's negative? Yes?
Sometimes I get lazy and I don't keep my money in a certain spot, so then I'll put it like in my backpack or put it in my room, and then I can like lose it and forget about it. So
Yeah,
that's
exactly. So not keeping it into a central place so you'll lose track of it. And also, one thing that a lot of people starting out in banking do is they don't keep a register in their checking account of what they spend. And so then you have a much higher risk of going overdrawn, and then you'll accumulate those fees. But I know that they want to go over a check, the parts of a check, so we'll go to that next. So how many people have not a savings account, but a checking account where you have checks? Okay, 3. So the main reason for having a checking account versus a savings account is what? Yeah. Exactly. So you have easier access to your money, and because of that, you will earn less interest. If any interest at all. Money market accounts, you can write checks on, but a limited number of checks, and you get paid a lower interest rate than a savings account. But a checking account, you typically don't get paid any interest, but you can write checks, and it's a safe place where you have all your money in, and just use that as a transaction. And then you can use things like debit cards to get that money out of your account too, as well as writing checks. So.
All right, so we're going to discuss 2 more things real quick. We started when I was telling a little bit about my history about that. I started out as a teller and now I'm a personal banker. And we know the difference. The teller is the person that you're going to make the deposits through, get your withdrawals, cash, stuff like that. Now what happens if the bank's closed? How do you get money? Okay. What does ATM stand for? It's going to be an automated teller machine. So instead of speaking to a real person and making your withdrawals and your deposits, it's going to be automated. It's going to be a machine, which is, we're getting more and more comfortable with that every day with our smartphones, our online habits, all these different things. We're getting away from the personal connect. The biggest point is that you can do all the same things that an ATM you can do with a real person teller. You can get statements, tells you about your accounts, your balances, your history. You can make deposits, you can get withdrawals, all of those different features, right? Okay. Now, this is a bit archaic, but at the same time, we have to understand how to write checks, because going forward, a lot of things are going to be done online and on our mobile devices, but this is still going to be a staple as you go forward. It's going to be basic knowledge. Just like in high school, they teach cursive. You guys know how to write cursive? Everything's done in a word processor. Again, I'm showing you my data. But signature. Does everybody know how to write their own signature? Okay. It's something you're going to need to practice on. Not just because you're going to be a famous athlete someday, you're going to be making a lot of autographs, okay? It's going to be your unique identifier, so your identity isn't taken. First of all, let's go over a check real quick. We'll get through this real quick and we'll get to the pizza, okay? All right, first of all, you got a check here. Is anyone familiar with what this looks like? This is pretty general. I just did it from memory, so again, like I said, we're all done on this, I promise. First of all, the institution where the bank is coming from, Wells Fargo Bank, you'll probably have a little more personal information. You'll have your name, you make your address and your phone number on there, okay? Tell us